Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is down about 0.7% on the S&P. Bank sector is down a little more today, about 1.6%. In this video, what I'm going to try to figure out is what we can expect. Going into next week, we do have a holiday weekend here, so I think on Monday market is closed due to the Martin Luther King Jr. Day. So we got 3-day weekend, and it's always nice. I always like to go through these long holiday weekends, and it's good to take some time off from the market and extra day and kind of rejuvenate yourself, kind of re-look at things. And so I am looking forward to this weekend. Hope you guys are also as well. So in this video, what I'm trying to figure out is what we can expect going into next week and possibly remainder of this month of January here. So I think today is the 15th, so we got another 2 weeks, full 2 weeks, right? 10 trading session, well actually 9 because of Monday. No, the market is closed on Monday, so we got pretty much 2 weeks here until the February comes. So let's see what we can find out on tonight's video, and it is all coming up right now. Let's start with the 65-minute chart, right? And then we'll come back and we'll look at the long term here. So let's check out that 65-minute here. So yesterday, we talked a lot about on the last night's daily update video. A lot of it was, there was a bearish divergence we talked about, and also, the market closing below my short-term moving average. And so there are several bearish characteristics that we saw on the last night's video. We gapped down, and this is probably the best case scenario for the bears, right? And there was this big gap here, and we've been talking about how bears want to see, 373-ish area. They need to see this thing breaking below the short-term moving average, and a lot of time. And we also talked about there was that rising pivot here, and so I think this was the best case scenario for the bears, just gapping it down. They don't want to deal with that support. And we were near that short-term moving average anyway. Bears didn't want to see price getting right back above the short-term moving average like it did here, and had to face another 2 days of run. With gapping it down, had to deal with the rising pivot, and then we see that now we're much further below the short-term moving average. And you can see, and even with the gap down, once that gap got filled, what happened? It acted as support, right? And that's kind of what happened here. There was that gap down, and that gap's been open for quite some time. Once that gap got filled, that acted as resistance, right? And we talked about that 2 nights ago, I think. It would have been best if they gap it over and open the market at 381.30 or so. We did see the gap up a couple days ago, but it just wasn't a big gap up. Ended up just filling this gap, and once that gap got filled, we started to see that level acting as resistance there. And then once we lost that short-term moving average, I think if the buyers were able to protect the short-term moving average, held above it, I think there was a good chance we can get above it. I think get to new all-time highs. I think on the last night, on yesterday's price action, once we were, not able to get above that short-term moving average, things got a little bit more trickier, for the bulls. Especially, we did also have that bearish divergence, which I'm going to talk about once I look into that oscillator there. So once the price gets below the short-term moving average, things gets a bit hectic, right? So that, I've been tweeting things out today that once we got below it, you can see there was an attempt to make a move to the upside and then grinded higher pretty much all day long. And finally, on the last hour, bulls kind of gave up here a little bit. And then you can see the bears kind of took advantage of that. And so now you can see in the short term of things, benefit of the doubt actually goes to the sellers. Short to micro term actually, we got first, we have the short-term moving average is now supporting the bears. And also this gap, we got another down gap. You know, bulls worked hard to fill this gap here, but now bears opened up another gap here, down gap. So at this point, bulls need to fill this gap as quickly as possible or gap it over. If not, we may see things get a little bit hectic going into next week. So what needs to happen here, so, you know, I want to kind of look at the midterm, because we haven't looked at a midterm for a while now, because I've been looking at more of a short term every single day this week. So looking at things in more of a midterm, we still do have this trend, which is we're still in an uptrend. And we can see that by looking at my midterm moving average, right? My midterm moving average continues to what? Increase, continues to rise, right? We did see how my midterm moving average acted as support. 2 incidents where we did see pretty sharp pullback both times, right? This was back in, you know, December, middle of December, and then early January. And you can see how things got kind of difficult and hectic here once the price was trading below the short-term moving average. That's below the short-term moving average right here. And currently we're trading below the short-term moving average. And both times, once we traded below the short-term moving average, we're talking mid-December, early January, bears were able to bring it down to the midterm moving average, which is currently residing at 370. Only time that I can see here, that you can see on your screen, is early December though, we did see price getting below my short-term moving average, but you can see this never got down to the midterm moving average because what happened? Quickly, we got back up above the short-term moving average. Later, it did see a pullback, but that became as what? Higher low. And that was the reason why, you know, early December, we never saw price making that trip to the midterm moving average, right? Because of that price getting back above the short-term moving average, and then we saw a couple days of rally there, right? So again, here's that, here's a scenario, right? And here's a scenario, right? And both times, we lost that short-term moving average. We lost through 3 times, right? Several times, we lost, in those circumstances, we lost short-term moving average. One time, you know, early December, it didn't go back down to the midterm moving average. But on the second and third time, we did come down, back down to the short midterm moving average, again, which is residing at 370. So just looking at this, I think, you know, we might have a higher probability the market wants to come down and retest 370. However, if bulls can get right back above 378.50 and reclaim that short-term moving average, perhaps we may see another days of move, right? So as long as we are below the short-term moving average and that gap remains open, as of today, I want to give benefit of the doubt to the sellers in the micro term and also short term at this point. Bullish though in the midterm, right? Just like we're bullish here, we're bullish here, and bullish here with my midterm moving average rising, right? Let's check out that oscillator. So the oscillator is at potential support. This is a potential support. I say potential because, well, we don't know it yet. We don't know it yet. We closed right at it, right? We talked about that, bearish divergence last night, which kind of, gave us that little bit more bearish characteristic on the last night's video with that bearish divergence and with that gap down and with the price trading below the short-term moving average. It got heavy, and then you can see my oscillator came all the way back down here. But right on that support, potential support, we may or may not bounce. I don't know. You don't know. No one knows. We just have to see how this market is going to behave early next week. So let's go back to the daily chart here and check out the long term. So what we just looked at on my 65-minute chart, we're just analyzing this. Did you know that? That's all we're looking at, right? That's what we're looking at, that little box, that little blip. So it's very important that we understand the big picture, right? So we can kind of see, because it's gonna happen. It's gonna have its up and downs. It's gonna have its shenanigans. Sooner or later, you will have 2% down day, 3% gap down, some crazy shenanigans. We're gonna have all of those this year. Mark my words. You're going to have some good bullish days, but you're going to have some, like heart sinking bearish days also. It's all coming this year, waiting for you, right? So, and we cannot always avoid everything, just like we cannot avoid all life coming situations in our lives, right? We cannot avoid all pains and all struggles. It comes to our lives, and just like that in the market, you must understand that we cannot avoid it all the time. We can try, we'll do our best to manage risk and to avoid certain circumstances, potential, events that might come. But I think ultimately you want to have the heart where, if this happens, I'm going to do this. If that happens, I'm going to do that. Never, right? Never trying to prepare for corrections where, I'm going to get out first and then I'm going to try to avoid because I think this is going to happen. Well, I tell you what, so many people said that here, and they missed out this, right? They think there's going to be a trip to, new lows. They think it's a bear market rally. They think it's going to come back down to make a lower high. They think, in the election, we're probably going to see 20% correction. And then what's happening is they've been missing out great buying opportunity that the market has created in 2020. Market has been grinding sideways for days and weeks and maybe a couple months here looking at the S&P, but there are many stocks were breaking out, not to mention small cap stocks, bank stocks, right? A lot of stocks were breaking out. So it's never actually a bad thing when market is grinding, because the market is providing bullish market. It's a bull market. Even though market hasn't gone anywhere and grinding higher, there are many stocks that are producing some great gains in the last couple months here. So looking at this daily chart, going all the way back to 2018 here, right? We've been tracking that rising pivot, and that's always a good thing because we got higher highs going here. What's higher highs mean? It means we're in an uptrend. We're not in a downtrend. We're not in a bear market. We're in a bull market as this market continues to cultivate and establish an uptrend there with the higher highs, right? So with that rising pivot, you can see it act as resistance, and then it's kind of, it looks like potentially we did that short-term support and trying to go higher. Further this thing goes higher from this pivot, better it is, because the further it goes, when we see a pullback on the next time, it may act as support, which would provide as opportunity to accumulate long before this thing getting back up there, right? So I think overall, I want to continue to give benefit of the doubt to the buyers. I think in the midterm to long term, right? And you can see my long-term moving average. Do you see this here? That's what is known as golden cross, right? So golden cross is a bullish signal. We saw that golden cross there. I mean, we can go back and track every time we saw golden cross here. So there are, you can see going back all the way to 2009, we saw that golden cross there. We saw that golden cross here. So that's 2009, late 2009. And there's that 2012, right? Market didn't go straight up, obviously, but the long-term performance is what? Bullish, right? That was a golden cross. And we saw that golden cross in 2012. Excuse me. And then you can see the performance from 2012. S&P was trading at 130, and a couple years later, we're at about 220. And we got into a nice bull run here. And even in that nice bull run, nice bull rallies that we saw back in 2012, 13, 14, 15, which is a 4 years of bullish run, you see there are many pullbacks and shenanigans and you know, downturns and stuff like that. And all those levels provided such a great buying opportunity. Now you look back. And then we saw another golden cross here, right? Do you see that golden cross? That happened in August, right? 2016, right? Again, after the golden cross, we did see pullbacks, man. This market, it's never gonna go up, you know what I mean, straight up. It's gonna have its pullbacks. But once that golden cross appear, thinking of things long term, we got into a probably one of the biggest buying pressure we've ever seen. I think I covered this back in 2017 and early 2018, that this is one of those buying pressure that we haven't seen in 20, 30 years. I remember I covered this on a video or my blog post. You know, because just the way this market moved, just how vertically this market made a move. And since 2016 all the way to early 2018, only pullback we saw was like 3%. That's entire year. And I think I forecasted back in 2017 that that's what was going to happen. The entire year, I think the biggest correction it faced was like 3%. That's it. So entire 2017, year of 2017, we only saw 3% correction all year long, right? And that happened after the golden cross, my long-term moving averages, and then we saw that final correction. I remember how many people are so bearish here and so anxious about Trump possibly taking the office, and then, this obviously that rally is known as a Trump rally, right? And then we went through the difficult seasons in the market with that, correction there, 20% or so, 25%, and then obviously that COVID decline, and then we saw that cross once again this year, right? And then after the cross, we saw these 12% and 8% corrections, I believe, before the election. And ever since then, this market has made a nice move in November, but been grinding ever so slightly higher last month and a half or so. But you see how my long-term moving averages are continuing to separate, and they're in a healthy look here. We're not seeing these guys waning down, or they're not starting to meet together. They're not moving side. For now, as of today, right? Things can change, obviously. But as of today, what we can see, because remember, every time you do your analysis, you always want to do your analysis based on what you see, what you think you should be seeing, right? That's all we can do anyway. Because when you do your analysis, especially technical analysis, we're going to what we're looking at historical price action and trying to figure out what is a good probability of potential outcome. Because obviously, man, nobody knows for sure, right? Do you know for sure what's going to happen in the month of January? You don't know for sure. I don't know for sure. Nobody knows for sure. Only thing we can do is we can try to find out. We can ascertain what is a higher probability likely scenario. Right? But at the same time, you have a plan. What if this happens? What if that happens? What would you do? Right? So I want to continue to give benefit of the doubt to the buyers. And at the same time, you can see my short-term moving average on my daily, we're sitting right there. So you can see that's my short-term moving average. That's my short-term moving average. That's my short-term moving average. I'm talking on my daily chart here. Gap just got filled here. And it's pretty similar action because we did see kind of like that pivot here, right? You can see prior resistance as a new support pivot. I kind of look at this as a pivot too. Prior resistance as new support, holding above the short-term moving average. So can we say we might be, right? Again, because I don't know. I don't know for sure. Like, if you're gonna ask me some stupid question, okay, market is gonna be up? Is market gonna be up or down on Tuesday, bro? I don't know. Do you know? Or are you gonna just guess? I don't know if it's gonna up or down Tuesday. I don't know if it's gonna up or down Wednesday. I don't know if it's gonna up or down Thursday or Friday, man. Like, you don't know. I don't know. That's the stupidest question I've ever heard. If you ever ask me what I think market is gonna be on Monday, just know it's the stupidest question ever. It's like you asking me if I'm gonna be sick or not on Monday, right? Or am I gonna be happy or not happy on Monday? Like, you're asking me, are you going to be happy on Monday or are you going to be sick on Monday, right? Which is a no stupid question, right? So, but however, we can do it this way though. Well, K's been generally happy last week or month before that. So looking at K's data, he's been generally happy this winter. Now that he can play tennis now because it's opened up and he's playing poker with his friends, and so he's generally been happy in the last month or so. So we could forecast that this coming week he probably gonna be happy, right? We can say it like that, right? He probably gonna be happy. So okay, so looking at this here, you can see we saw the double bottom. There's a double bottom here, right? And above my long-term moving average, not to mention. And then we saw that pivot, and then we saw that price staying above my short-term moving average. We see this pivot here, and then price, as of today, as of now, we are staying above that short-term moving average. So we can kind of forecast and say, you know what, maybe next week the market might be happy, right? But can things change? Of course. It's life. It's market, right? And so in the short term of things, we don't know for sure, right? I mean, this might even come down to retest my pivot, fake people out before going higher. Who knows? But as of today, as of now, I think there's a good chance that we may see some support here. If not, we look at in other areas and say, hey, this level is acting as that pivot. Maybe that's a level of support, right? But with that long-term implication showing us bullish signal, and as you guys know, I'm a long-term investor and a position trader. So if you're so concerned about what's going to happen Monday because you're a day trader, you're a short-term trader, you're an overnighter, I can't help you. And frankly, I don't think anybody should be trading like that. Let's go to banks here. So banks this year, it's beating the S&P year to date, but I remember how lagging the banks were along with the small caps last year. It caught up. We're back to all-time high level. And it all happened in about 7-8 months or so, right? And you know the performance of the banks since October lows. We're talking almost 37% in just 10, 11, in just 3 months, right? That's a big rally there. I believe Russell 2000, the small caps did 40% plus since October lows. We got the rising pivot here, right? We made a move, retested a couple times, continue to move higher. And look at this here. Despite the fact that we saw this vertical move, once it hit that short-term moving average, we made continuation to the upside. What if this was today? What do you think I'll tell you? Let's say this is today. Here. Here. Let's say, I guess my short-term moving average in there. So let's say this was today. Let me, for a second, I'm just making a point here. So let's say this is today, and we're just right on that short-term moving average. What do you think I would say? And I think I probably covered this on my video back in early December. Well, I want to give benefit of the doubt. I don't know what's gonna happen next week, man. I don't know if we're gonna lose it or not. But hey, it looks like we're staying above it. It looks like we're retesting that rising pivot. I don't know if you're gonna break below it or not. I mean, you wanna trade it this way? You wanna guess that it's gonna, you know what I mean? You either it's gonna break below it, go high. But I want to give benefit of the doubt because we saw higher highs here. And this market and banks been faithfully cultivating higher lows. We never saw lower highs, right? We continue to make higher lows, as you see these levels here. And then with that, that's a higher high cultivation. We got the rising pivot. We're just retesting that short-term moving average. And people are like, well, it can't possibly go any higher. It was 2340 back in October lows. Now it's 29. No way it's going to go higher. It's probably going to trip back down to 26, man. Well, you say that because you probably bought some puts, right? You just want to call that top, right? You've probably been doing it for years. It's difficult way to survive, let me tell you. Especially trying to fight the trend. You might get lucky here and there, but can't do it consistently. And then that happened. Right there. Like, did I see the future? No. That was higher probability scenario given the data that I could see at the time. Could this market could have came down also? Maybe fill the gap first before going higher? Of course. Of course it could have. It could have. But I think it has a higher probability of it because once we saw that momentum, we saw a little bit of consolidation. And consolidation is always a good thing, right? That's how buyers like to operate anyway. Because, I mean, it will be overbought after this on the daily chart and needed to correct their time sideways and then run again, right? And that's what I'm saying when I look at S&P also. What's going to happen on Monday, K? Dude, I don't know. Right? But hey, we're staying above it and we're retesting that short-term moving average. Let's see what happens. But I want to give benefit of the doubt to the buyers. And that's what I'm saying. Let's go to VIX here. So VIX popped a little bit and we're still not able to fill this gap. And I think I said this before a couple of months ago. So probably it'll take entire year, this 2021, to fill this gap. Because you can see this gap was up all the way over here. We filled a little bit. It came down. Filled just a little bit. We're bouncing a little bit. So I think it's going to take probably entire year 2021 to fill this gap. And my midterm moving average is acting as resistance there as they continue to see that upper wick here. Let's go to gold. Gold actually saw a little bit of slide here this week and then a little bit of bump right on that fib and then continue lower today. Potentially in the micro term, that might be a slight lower low. But looking at things more short to midterm, maybe midterm overall, you know, we're still in that vicinity. We did see that equal highs, which is a good sign because that's not lower high. At least that's an equal high. We need to see that higher low, right? This is a low. Can this be a higher low? As of today, we don't have any evidence of that. I mean, in the long term, are we bullish? Yes. Long term, we're bullish, right? Long term, we got that low, and we're on that low. We got that high. We got that high, right? Like we're just kind of been in that falling channel, midterm downtrend type of move, and trying to figure out where that high low is going to be. Is there a possibility this thing actually could come back down to retest that long-term moving average there? It could. But for now, I think first things first. I think if we can somehow, because you know how gold is. Sometimes out of nowhere you see a big gap or something like that. If we do see this thing, that's what bulls need, because bulls already set it up with the equal highs here. They just need higher low and then make higher high. Then that's it. I think then bulls can really bring it up above 200. We don't have the higher low yet. So let's see what happens next coming week. One last one, let you guys go with this Bitcoin. So interesting happened here with the Bitcoin. I'll zoom in here. So you can see this thing gapped down and then we kind of moved higher and then we gapped up. So without today's move like this was actually an island gap because there's a gap down, there's a gap up. So I actually had it, colored in green because I thought this was an island, right? That's an island, right? That's gap down, that's a gap up. So I thought, okay, maybe this is an island gap. And then you know how sometimes Bitcoin can get crazy, especially when it's extended like they can get pretty crazy, and it gaps right back down. Now it's turned into this as island, and now this is an island top. So at this point, maybe flip it back up. I've seen that happen before on the equities. I don't know on Bitcoin, where back to back, like island bottom, island top, and then island bottom again. Best case scenario for the bulls, probably just gap it up and then turn this into another island bottom there. And then maybe I think we can go higher. If not, we got short-term moving average here. We got a lot of gaps. And that's a good thing at least, because if the Bitcoin start coming down, those gap areas going to act as support. But I think it's still, we are extended, but I think we want to continue to give benefit of the doubt to the buyers as my short-term moving average is continuing to move higher. And last time we saw some, volatility. Maybe is that what's happening right now, right? You can see right there, kind of it moves in that way. We see a move, some volatility there. We see a move, we see volatility there. We see a move, we see volatility, maybe continue higher. But I will continue to give benefit of the doubt to the buyers. But keep in mind when the price is elevated in this kind of way, and especially speculative asset like Bitcoin, well, people go crazy chasing and stuff. When things get crowded, things always get crazy and stuff like that. So just keep that in mind. Well, hope you guys enjoy this long holiday weekend. I'll come back for you on Tuesday. We'll go from there. Enjoy your weekend and good luck trading next week.